Hey guys, what is up? Fabio here. Hope you guys are all doing fantastic and welcome to another daily market outlook. In today's daily market outlook, the pairs as per usual are going to be discussed, and without further ado, we are now going to dive in and see what is going on. Okay guys, so pretty much what's been happening to the dollar index is of course a logical pullback from this area of supply. What I'm now essentially waiting for is this area of demand to get hit before potential further upside. This zone took out this area of supply, therefore this is a significant zone and therefore I do expect a bullish reaction from it. So I'm going to be waiting until we move in towards that zone and then dive in towards the lower time frame to see what is going on. Furthermore, just a quick view and glance at the daily time frame, we can see that we're still inside a daily bullish trend, with this being our swing low, this being our swing high. So I'm essentially just looking for further upside continuation, possibly on the dollar index. I am going to keep in mind that we could still see a liquidation of this swing low over here, take out the stops underneath it and dive in towards supply before seeing further upside and therefore forming some kind of descending channel slash wedge with channel maturement on that second with a fake out on that second low or a third trendline touch of this trendline over here. So yeah, just keeping that in mind, guys. So yeah, let's just continue to Aussie dollar, our first pair. And Aussie dollar, guys. So Aussie dollar has been moving up since we touched in towards this daily area of supply and 4-hour area of supply. I was looking for further downside yesterday. Looking at the daily, we of course have seen, let's say, maturement on the daily in the sense that we've seen the 50% mark of the overall bearish daily range being met. Furthermore, we have of course ascending price action, and we have hit some equal highs over here alongside supply. So I'm just keeping that in mind when looking at the 4-hour. However, 4-hour is still bullish. We saw a big impulse to the upside last night during the Asian session. This had to do with the fact that there were some positive numbers in regards to unemployment claims for Australia, employment change and unemployment rate. Both were positive for Aussie, and that's essentially now causing the rise up. So I was looking at these wicks over here for further downside. If you dive in towards the 1 hour, you can then see that that's a clear 1 hour order block. That's also the reason why we saw a dump back down lower yesterday. But for now, what we're pretty much looking at is a potential further rise on Aussie dollar in towards at least this area of supply, because this area of supply has now been taken out by this wick, which means there's no supply inside here anymore, and it would be more logical for Aussie dollar to continue up. Now diving in towards lower time frame, we can also see on the 15-minute that there's bullish order flow. This area of demand caused price to push up higher. Then we can clearly see the retracement back down in towards this area of demand. So yeah, this is a 50% body candle. This is the imbalance which took out this high. Market comes in and sees further upside continuation. So until we, let's say, break this 15-minute trend and take out this low for now, because we're now inside this 15-minute bullish range, we are probably and most likely going to be moving up higher. So I'm going to kind of keep my eye on the 15-minute, because once we see a 15-minute bearish change in the trend, that could signify that we're then going to see further 4-hour downside. But it could still possibly wait until we come in towards this area of supply over here. So yeah, that's pretty much it for Aussie dollar. Let's head over to our next pair, which is euro dollar. And euro dollar, guys. So euro dollar has been seeing further upside from this extreme 4-hour area of demand in line with 4-hour structure. It is looking good for euro dollar to push up higher for now, until of course the dollar index meets supply. So let's see, we could still see some further upside today on euro dollar. Just keep in mind that there is going to be some supply inside of this current wick to the downside, which could push price down lower. But of course, it's more favorable to start selling from, let's say, this area of supply or this extreme area of supply. Even though it's against the 4-hour trend, the daily and the weekly are still bearish. So just keep that in mind when trading. Looking at the daily real quick, we can then see, of course, is that the daily is just clearly bearish. We've kind of seen this ascending correction and we could start falling down lower. But yeah, we could still see that 4-hour pullback before any further downside continuation. So just keep that in mind. It's a higher probability for downside continuation once we come into, let's say, this area of supply or this area of supply. But for now, yeah, the 4-hour is bullish. The 15-minute is also bullish. So pretty much the same as on Aussie dollar. Just wait for the 15-minute to flip bearish. yeah, before looking for those potential shorts. So yeah, that's pretty much it. We're now breaking this high, but yeah, let's say we break this high, this then becomes your swing low. So we then need to take out this swing low to kind of identify that there's going to be, let's say, further downside continuation on the 4 hour. So yeah, the 15-minute is something that I use as an early kind of sign to identify that the 4 hour pullback is going to be coming in. But yeah, that's that for euro dollar. I think pretty clear on that. Let's head over to our next pair, which is pound dollar. So pound dollar, pound dollar saw some further downside once we pulled up a little bit higher in towards this area of supply over here. Clear rejection with these upside wicks. So yeah, what did we see? We saw some, kind of like a star pattern over here, but for now we're moving up higher. Pretty much just keeping my eye out for this zone. Once we hit this zone of supply over here, then I'll be looking for shorts to the downside on pound dollar. Looking at this overall structure, we just have to keep in mind though that the daily is of course still bearish, and we could still see further downside continuation on the daily, and that this is just going to be, let's say, an intraday pullback. 4 hours still a little bit messy though, and I would prefer for us to start taking out this low, or at least this low. Well, yeah, at least this low over here if we want to see further downside continuation. But yeah, as long as this low is respected, 4 hours still seems pretty bullish for me, because I would say this is your low, this is your high. Nice pullback in towards demand, but let's see now if we're going to see some further downside from either this supply, or this supply. That's kind of what I'm going to keep in mind, because the daily is still bearish. So yep, that's pretty much it for pound dollar. Let's go to Kiwi dollar. And Kiwi dollar, guys. So Kiwi dollar saw some beautiful downside movement from this area of supply, which I mentioned yesterday. Trading can be pretty easy if you just trade supply and demand zones. If you were to, let's say, just take a short from the supply zone, this would be an easy 1 to 2.2. So yeah, pretty nice trade overall from this area of supply. But for now, yeah, Kiwi dollar is just a little bit messy. I'm kind of keeping my eye out for this area of demand, because this area of demand has been sustaining price, or yeah, has been causing support for price, let me put it that way. As you can see over here, a tap in towards it, over here, clear tap, over here, once again, a clear tap. But the more times that we stay inside this area of demand, the weaker it's going to get, because the more often that you tap in towards an area of demand or supply, yeah, the less orders there are going to be inside of it. So for now, what I'm kind of keeping in mind is that we could start failing this supply zone or demand zone, and then start falling down lower. However, we do have a lot of liquidity built up above this high, so I'm just still keeping in mind that if we still see further upside continuation, higher probability shorts are going to come still. But yeah, the 4 hour is still bullish, and the daily also has not really made a significant pullback. So that's also something I'm keeping in mind. We're also inside this daily bullish order block over here, which caused a breaker structure of this high. So that is why we could still see further upside movement, but we need to start moving out of this area of 4 hour demand now, because the longer we stay inside of it, the weaker it is, in my opinion, going to get. If we break this low over here, then for me, yeah, Kiwi dollar is most likely going to break this low as well, and then we can start looking for shorts on, let's say, the pullback in towards this supply zone, because this supply zone then took out this low and essentially these lows as well. So yeah, that's that for Kiwi dollar. Let's go to our last pair, which is gold. And gold, guys. So gold saw a beautiful rise yesterday in towards the highs. Finally took out that liquidity, which I've been talking about for quite some time. Yeah, the supply, of course, failed at a certain point in time. No real new supply zone was created, and essentially this push down, we saw a push down, but yeah, we never really took out this low. And as you can see, we kind of started stalling at the lows, so bearish momentum wasn't really that strong anymore. We also kind of had this descending wedge pattern. Saw a big rise up, took out all the liquidity above the highs, and now currently price is stalling inside 4 hour supply in these daily wicks. So look over here, we have these daily wicks. This is currently causing price to stall. If we can see some further downside in the near future, then I will be looking for, let's say, a short into at least this zone over here at around 1825 to 1822. That's pretty much what I'm looking at for a potential pullback. But just keep in mind, when, let's say, gold is this bullish, it could just still rocket another, 40 or 40 pips, 400 pips, whatever you want to call it, in towards, let's say, more these kind of areas of the market. So just keep that in mind when looking at gold at the moment. It could still make another big move up, Nothing is confirmed over here at the moment. Also, we are of course consolidating, but it could just be, let's say, the consolidation before the next big move up. It is gold. Just keep in mind, it does not need to pull back, so don't start shorting like a madman. Just keep that in mind. So yeah, look at the 15, and let's say the 15-minute starts breaking the lows, then kind of try and get in, but otherwise just keep out, because it's just very risky starting to short over here. For me personally, higher probability shorts are going to occur once we come in towards this zone. For now, I'll just stay a little bit more on the safe side. So yeah, that's it for today, guys. A little bit of a long episode, but thank you so much for tuning in as per usual. Wish you all a fantastic day, and we will speak very soon. Thanks, guys.